Imagine waking up, checking your phone, and seeing your money grow while you slept. No boss, no extra hours, just your money, working for you. Sounds like a scam, right? Well, this is exactly what the stock market has done for millions of people, but here's the problem. Most people hear the words stock market and immediately think Wall Street, complicated charts, people screaming in suits, and because it feels confusing, they stay away, which is dangerous. Because the biggest financial risk today isn't losing money in the stock market, it's never investing at all. So in the next few minutes, I'll break down how the stock market actually works in the simplest way possible, and by the end, you'll understand why the wealthy treat the stock market like a money machine. But first, let's start with something surprisingly simple. Point 1. What a stock actually is, 020 to 150. Imagine your friend starts a pizza business. Let's call it Mike's Pizza. The business is growing fast, but Mike needs money to open more stores. So he makes an offer. He says, "Give me $1,000, and I'll give you a small piece of my company." Congratulations, you now own a share of Mike's Pizza, and that's exactly what a stock is. A stock is simply a small ownership piece of a company. Companies like Apple, Amazon, and Tesla sell shares to the public. When you buy their stock, you literally become a tiny owner of the business, which means if the company grows, your investment can grow too. But here's the part most people miss. Stocks don't grow randomly. They grow when businesses grow. More customers, more profits, more innovation. And when companies succeed, shareholders benefit. But now a bigger question appears. If stocks represent real companies, how do their prices go up and down every second? And the answer is surprisingly simple. Why stock prices move. Let's go back to Mike's Pizza. Imagine 1,000 people suddenly want to buy shares in the business, but only 100 shares are available. What happens? The price goes up. Why? Because demand is higher than supply. Now imagine the opposite. Bad reviews start spreading online, sales drop. People start selling their shares. Suddenly there are more sellers than buyers, and the price falls. That's the stock market in its simplest form. Prices move because of supply and demand. But here's where emotions enter the game, and emotions are powerful. Fear makes people sell. Excitement makes people buy. Sometimes the market moves because of real business results, and sometimes because people panic after reading one dramatic headline. Quick question. Have you ever seen a headline like "Market Crash" and then check the chart only to see it drop 2%? Yeah, welcome to financial media. But here's where things get really interesting. Because the biggest profits in the stock market don't come from trading every day. They come from something far simpler and far more powerful. Point 3. How people actually make money, 310 to 430. There are two main ways investors make money in the stock market. First, price growth. If you buy a stock for $100 and it grows to $300, your money just tripled. Simple. Second, dividends. Some companies share their profits with investors. They literally pay you cash just for owning the stock. Imagine getting paid simply for holding something. That's the power of ownership. But here's the secret wealthy investors understand early. The real magic isn't just investing, it's time. When your investments grow, and then those gains start generating more gains, you unlock something called compound growth. Think of it like a snowball rolling down a hill. At first it's small, but over time, it becomes unstoppable. That's why someone who starts investing at 20 can end up with hundreds of thousands, even millions, more than someone who waits until 40. Not because they're smarter, but because they started earlier, which leads to the final truth about the stock market, and this one changes everything. The biggest mistake most people make. Most people think the stock market is about getting rich quickly. It's not. It's about getting rich slowly and consistently. The people who win aren't gamblers, they're patient investors. While others chase hype, they quietly build wealth, year after year. And if you want to understand why wealthy people think so differently about money, you need to watch this next video. Because the biggest difference between rich and average people isn't income, it's mindset. So click the video on your screen now and watch The Mindset of Millionaires. Think like the rich. Trust me, This is where the real wealth journey begins.